Good morning, everyone, to another episode of Future Proof. Today I'm here with Richard. Good morning, Richard. How are you?
Morning,
Good?
Sergio. Yeah, not bad. How are you?
Not bad, not bad. I'm actually quite excited because, I'll do a bit of sum up of the discussion that we've done with Richard on the last 3 months. So, people listening to us or that will listen in the future, they know that we just don't pick topics out of the blue, but we have a bit of an historical thinking and strategizing over those topics. So we are actually executive PhD mates. So we started exchanging ideas and point of views on technology and financial markets since quite a few years now. And recently, we really, thanking to the work as well, which I've done in blockchain, cryptocurrency, digital assets, and obviously Richard, the interest on African capital markets, we started brainstorming on how these two worlds can actually come together and somehow improve the economics in a developing country. That's how we started this conversation. We also have somehow engagements, which obviously we're not going to disclose, that we're trying to develop because we have a very specific interest to see whether these ideas and this strategy can find a space in real business. So this morning we're going to just have an open conversation without getting into the details, but it is an interesting point to open it up to the world and see whether anyone would have comments or suggestion to put on the table on the discussion. So maybe I leave Richard like just a few seconds if you want to introduce yourself, so everyone will know who you are and where you come from, and then maybe we can kick off on the topic.
Okay, thanks, Sergio. Yeah, so as you said, we met on the PhD program. But my background is that I used to describe myself as just I used to be a banker, but I started my career on a trading desk, multi-asset trading desk in Canada, execution focused on stocks, bonds, and options, and then. At some point in my career, when I moved to the UK in 2003, I used to cover the UK government and head a lending unit to a sub-sovereign part of the UK government for Barclays. But then left there and moved to the buy side, focused on frontier market fixed income, and then moved to another buy side institution focused on trying to build an equity linked debt fund focused on corporates in sub-Saharan Africa, and then have been doing some advisory work since then while combining that with the PhD.
Good stuff. So I think you know very well African capital markets since a long time. So I would like maybe to kick off with a simple one. Like one of the main points that we raised during our conversation is the opportunity to leapfrog, which is
Mm.
somehow one of the most interesting aspect when looking at technologies, because sometimes it's more difficult to change existing and functioning system and processes rather than actually, finding yourself a little bit behind compared to other more developed markets, and having the opportunity to implement new strategies and new tools to do what we call a leapfrog. So find yourself in a very short time in a sort of futuristic position compared to other markets. And that's what we believe, China has been doing for the last few years. Everyone has been talking about central bank digital currency coming out of China. If we look at e-commerce, payment systems, financial markets, they've been really pushing the digital trend in the last few years and really leapfrogging the developed world, if we want to call it that way. I'm one of those that believe that China missed somehow the first and the second industrial revolution. They've been always a large part of the economy, but somehow much behind on a lot of aspects. And now, they seems to be much advanced compared to other parts of the world. So the question would be, it would be really interesting to see whether we could have and we could design a similar opportunity in the African countries, and how also you see a sort of collaboration, because obviously, China is a very large country in terms of population and opportunities. Why I think Africa is more similar to Europe, where you have different economies, different countries, which at some point they have to leverage each other and relationship and develop together towards a vision, rather than really sitting in isolation between their economies.
Yeah, no, I think that just to go back to the challenge of either leapfrogging and what that really means and what that's meant in the African context, it's most usually applied to mobile telephony. That call it 20, 30, 40, 50 years ago, the number of actual landline telephones on the continent was infinitesimal. Now, though, mobile penetration across the continent is well advanced. A country like Nigeria, that at some point I remember reading a stat that say the population was 180 million. There were over 200 million mobile subscribers, and so if you go to a meeting in Nigeria, you would often see executives with multiple phones or one phone and multiple SIM cards, as it were. But the way in which mobile telephones have been driving that leapfrogging ability is most apparent, certainly from a financial market perspective, in my mind, in somewhere like Kenya, where the government has taken advantage of the fact that something like 40% of the Kenyan economy transacts through M-Pesa, which was actually developed by Vodafone, and its local subsidiary, Vodacom, which is part of alongside Safaricom, funded in part by the Department for International Development in the UK. They provided, I think, a £1 million grant. But as it stands now, it is a big driver of financial inclusion, but also helps the economy. It greases the wheels of the economy, as it were, and that everybody uses it at some point. And so both internally, but also in terms of the diaspora outside the country engaging with it. And the government does and has sort of built upon that to use mobile connections to allow them to help raise money. So raise money for budgetary support. So instead of the typical way in which a government issues bonds, they're allowing retail investors to help fund those budgetary items as well by raising money through that, and they're extending that to sort of look at developing ways in which retail investors can participate in the broader capital market. So to me, I think, as you say, there is a real opportunity, as we've discussed, about institutional innovation that might actually allow the continent, which, as you say, is fragmented. 54 countries, which every conference I go to, that somebody feels the need to remind people that the continent is not a country, but a group of countries, and there's a high degree of heterogeneity there in terms of size, in terms of sophistication, in terms of the focus of the economy, but they all have a similar issue, which is businesses aren't getting enough capital at the right price, and there's a real opportunity there to leapfrog.
And then actually, I mean, financial inclusion, it's a very interesting word. And I think even inclusion by itself, looking at the digital world, becomes a very interesting perspective. I mean, even from a digital ID perspective. I mean, if you look at what they call underdeveloped world, I mean, there are lots of people which don't have, I don't know, an identity card, or maybe they have a Facebook account. You see a lot of reports running around the world where you see, I mean, it's much easier to get a phone and get somehow a Facebook account and maybe having a proper ID and relationship with the institution. So obviously, when you go digital, all these barriers, I mean, with the right architecture and the right solution, they basically go down to zero, because you can collect everything on your phone. You could have a digital wallet containing all the documents and all the ID and whatever you need to identify yourself and get things done within public administration, banks, everywhere, as much as have a payment system. And that's where we connected on the digital assets more than digital currency. I never like to use the word currency, because it just brings the attention on a different perspective. But the fact that you can transform, I don't know, payment means into digital form, which I mean, basically meet the goods and the services in the same forms and facilitate transaction between people and between business. But the question would be, how can you culturally really get to a design of a future like this one? Because that's the world legacy, which is on the other side, the tendency to always grow in a sort of rigid and structural infrastructure and architecture. So that's the point of banks. Banks, I mean, historically, they develop branches. No, they get very they have a very capillary sort of infrastructure to reach the consumer, and then suddenly we had all the challenging banks coming to market, like Revolut, like N26, which basically don't exist. They don't have a sort of one-to-one relationship. I think I never met a sort of bank manager with my Revolut or my N26 accounts, but I can still get everything done. So do you think that culturally you need to change the perspective to structure services along those ways?
Well, I think that I think you do, and I think there are 2 points. So if you go back in history, I was telling my wife and kids this story, boring them the other day, that Christmas is coming, and the film It's a Wonderful Life, and it's about a bank run in a small town. At some point in the U.S., there were regulatory barriers on cross-border banking. So each town, state had their own banks. They couldn't actually transact business across those borders, and this is in the U.S. So then, if you look at Europe, or if you look at Africa as a group of countries that have come together, whether by geography or politically, this sort of cross-border banking and cross-border regulation is part of the issue. But I also remember that when I started at Barclays, the CEO at the time, John Varley, was giving a talk at CAS actually, and talked about then in 2007 about how it was easier to do banking on your phone in Africa than it was in the UK at the time. And one of the things that Barclays sort of, I won't say pioneered, but looked at in terms of this different model was a mobile bank in and of itself, that they would have a van that would go to the villages in rural parts of various countries to bring services to the people, as it were. But I think that where we are now in 2020, and in terms of where Africa is as a continent, following Nigeria's recent ratification of the African Continental Free Trade Agreement, is that possibly the way in which you might remodel the sort of institutional architecture of banking and the provision of financial services is thinking from a Pan-African perspective. So there are some Pan-African financial institutions that offer services to, in very specific interventions, sort of in the idea or in the area of trade finance. So Afrexim Bank was set up very specifically for that, backed by not just the African Union Commission, but also the African Development Bank, and supported by a range of other multilateral and financial institutions. So there is the opportunity from where I sit is that there needs to be an institution that has the credibility across borders, that is focused on helping build, let's call it the collective resilience of the continent by intervening and providing an overlay of a network for the provision of financial services in all countries, as it were, on the continent.
Which again can be benefiting from technology integration such as blockchain, digital asset, distributed ledgers, because I'm always thinking, in a developed world where you're full of branches and people and employees, it's very difficult to reverse the process and find the solution to, if you want, cancel whatever you have done because it's not useful anymore. But in an environment where you don't have this infrastructure, so the problems until a couple of years ago, 3 years ago, maybe even more, just to say when those solutions came to market and they show that it is doable, that is that it can be done with a technology perspective, it should be a sort of no-brainer decision, right? I don't need to think about having, I don't know, 100 branches in maybe 1,000 branches across 54 countries, but I can just, have some sort of one main branch in each and every country. Then I can have all the technology infrastructure. I can reach people through the mobile phone, and I can start understanding how to push product and services through a complete digital infrastructure, which somehow doesn't even need a sort of political and institutional Pan-African Union. No, it can just need a few people sitting down and deciding the rules of the game and create a sort of digital environment where this sort of union works, but it doesn't need a whole physical baggage that maybe came in the past with Europe as well. That somehow is one of the questions I always ask myself. So
yeah. No, well, you know my model, as it were, that says, look, there are three issues that every country on the continent, or the continent in aggregate, thinks about. So, how do you drive this sort of broader financial inclusion, both, as you say, and as we say, of households and individuals, but also firms, right? How do domestic politicians and political institutions maintain a degree of sovereignty? Because that's one of those ideas that each country has its development plan and has a strategic view of where the country will go, and how do you bring them all together, and push in the same direction in terms of, as I say, increasing the level of collective or regional economic resilience. So how will they, come out of this pandemic? How will they come out of a period in which has been described, or is being described as, we're past peak globalization, and this regional economic resilience is sort of, to me, in context, again, a little bit political, that this idea of, the great power competitions between, the US and China, both economically and technologically, but also including Europe as an entity, as a sort of political union, that again is responsible for a large portion of economic activity globally. And so, technology, but also an institution focused on trying to, solve for those three issues. There is, when you talk about technology and talk about Facebook, the idea that Facebook is possibly how people in large parts of the developing world access the internet, means that there are these potentials for these networks, as you say, that there is and there are technologies that would allow for the provision of these services to diffuse, and get to where they're needed, if you can actually design some of that governance architecture with an institution that is led by technology. I mean, that's one of the things that, to me, is where there is this massive opportunity.
which makes a lot of sense, because in my mind, maybe I get it completely wrong, but when I'm thinking about technology, I'm thinking about infrastructure. I'm not thinking about, agreeing on all the policy, agreeing on everything that concern managing, I don't know, a country or a direction of the future. I mean, sitting down and understanding which is the best infrastructure that we need to share as economic
Yeah,
environment, which is like in Europe looking at roads, railways. I mean, that's how it
yeah,
works. So you know that you have businesses moving goods left and right, because that's how the European market has been created. But still, as long as you have roads functioning, border functioning, railways functioning, then you can sit in the European Commission and discuss on how much money you're gonna put in the market after the COVID pandemic. But it's completely two different discussions. And that's why I like the power of the technology that we have available today, is because somehow you can take it a step further. Now, until yesterday, we had the internet. That's it. So you needed portals, you needed website, you needed somehow services designed by the
hmm
institutions. Why now you can put networks in place.
yeah,
So blockchain, in my understanding, is it's a shared network that is going to allow transaction to work, even though two countries, for example, are arguing about whatever they're arguing. We don't really care at this point. We just know that's what we call trust. You have an infrastructure that you can trust as a business provider. It's a private entity in carry on having transaction and cross-border payments, cross-border transaction without worrying that something is going to change, because you know that
Yeah,
the transaction is going to be always guaranteed. And I think that's the power of the architecture that we might be able
yeah,
to create at this stage of life. Does it make
yeah,
sense?
yeah. Yeah, no, it makes total sense. I mean, because if you look at the International Organization of Securities Commissions, I mean, they've got three principles for securities exchanges. You know, protecting investors, that's obvious. Reducing systemic risk, but really, it's about ensuring that markets are fair, efficient, and transparent, right? And that's one of the major advantages of blockchain technology is that there is this inherent transparency in it, right? And that's where I think that needs to be harnessed, right? And I think that there is timing is everything in many things, and there is this sort of unique opportunity. And I know the phrase is being used by organizations everywhere about building back better, but to the point of leapfrog versus legacy, there is this idea that I would say this idea. My research looks at the state of securities exchange and capital markets across Africa, and if you say that there are, just in terms of plain vanilla stock and bond and derivative exchanges, let's say they're under 30 across the continent, across 54 countries. That means that there is certainly one regional one that covers about 8 countries in the former CFA zone. But really, what I've identified is that there are only 10 or 11 that instead of being the top half, there are only 10 or 11 that have been in existence for long enough that are actually providing a degree of transparency. And when I say transparency in this context, I actually mean data, right? And that's again where the blockchain technology solutions come into play. That one of the challenges with Africa from a sovereign and corporate level is the provision of timely data. And so in looking at a selection of these capital markets, it's obvious to me that they are suboptimal in terms of their provision of services to the entire continent. So is there a way in which the best can help the worst, as it were? But is there I guess, what is the perspective, or where's the entry point? And I still am very very convinced that you might have to take sort of pan-African or continental approach and get into the slipstream of some things that have actually been already happening on the continent. I mean, the African Continental Free Trade Agreement is one of the ambitions is about creating a trade area that will be significant, 2.6 trillion US dollars. But then there's some tools that they've been sort of developing or have been developed alongside these initiatives that I think, as I say, can be harnessed in the way that I've been thinking about.
And this was the argument that actually led us starting exploring decentralized exchanges and whatever it's going on, if you want, on the digital assets blockchain world. Because I have a question which I actually don't know, that maybe is going to lead into the next part of the conversation. I'm thinking that you need infrastructure in terms of data and transparency and access to services to have the capital markets working properly, as you just mentioned. But you also need a sort of, I don't know, livelihood into the economy. So you need the product that people are going to invest in. So somehow in the strategy, you need the two pieces coming together. You need a proper infrastructure, but you also need to create new companies which are going to list themselves. You need to create a volume of interest for investors to actually be excited. And that's what I think has been driven money into the Chinese stock exchange in a certain
Yeah,
way. I've been researching recently, and I think that a lot of US hedge funds, a lot of big money coming from, I mean, that side of the world, are slowly moving into China. And I'm looking at the usual suspect, no, Tencent, Alibaba, and everything relates to technology. So somehow, I don't know if you agree with me, but if you look at the sort of development strategy for capital market nowadays, you need to somehow to kill two birds with one stone. You need a strategy, you need a project which is going to create both situations, a proper infrastructure and sort of new companies which would be interesting to actually come to Africa, develop the business, integrate into this vision, and then I mean go and look for capital in stock markets, right?
Yeah, yeah, no, I mean, and I know it's something that is a I'm gonna use a term that since we met, going back 5 years, that I've become more and more interested in is this idea of ecosystems, right? And so you need an ecosystem of not just the companies, but the people who are helping advise those companies develop to a point at which they are investable propositions. I mean, the number I was very focused on. When I was at after Barclays at the two buy-side institutions I worked at. I was very focused on on debt, corporate debt over sovereign debt. There's less of it on the continent, and that's problematic. But then that it really is about creating. When we talk about stock markets, we're talking about risk capital. We're talking about growth capital. So there is, as in the disclaimer on any investment sheet you ever see, that, there is always a risk of loss, right? So it's not the same sort of calculation about, the willingness and ability to pay back money that you've borrowed, financing companies that are helping diversify the economy. So there is a well-held or long-held view that a lot of African countries' economies are focused on extractive industries and commodities. And to be fair, that is the endowment that a lot of countries have. How they manage it is, really about how they're gonna grow. But by the same token, there are a lot of when we talk about the leapfrogging of mobile telephony and so forth, there are huge pools of capital and talent across the continent that are developing businesses that are responding to consumer demand, right? As spending power grows and middle classes grow across these continents, people want services of various sorts. They want to buy things. They want experiences. They want the same thing that everyone wants across the world. So creating this ecosystem of companies, or at least supporting this ecosystem of companies. I've looked at models that exist and that are new in the U.S. For instance, there's an entity called the Long-Term Stock Exchange. Again, 5 different principles that overlap with the IOSCO ones, but they're really focused on long-term stakeholders, and engaging with them, long-term strategy, compensation, getting away from this idea of sort of quarterly reporting and so forth, board engagement, but really about how you engage with investors and getting the right sort of investors that have a long-term focus. This is, it's called the Silicon Valley, or referred to as the Silicon Valley Stock Exchange, as it were, that is actually about providing growth capital on a long-term basis. But to me, the interesting thing is that it's registered with the SEC in the US. It offers and tries to provide the same liquidity as on any other exchange. But so it effectively offers another path to public markets for some of these companies, but with a different set of incentives, or a different incentive structure. And I think that's the key for looking at leapfrogging. It's not about building the same sort of ecosystem of investment banks and advisors, and IPO processes that effectively have been captured by big institutional investors, but finding a way of effectively democratizing capital markets, and then effectively offering a different, let's call it a digital pathway to the public markets for a whole range and a set of a new set of companies, as it were, because where banks in Africa have have been engaged, there are some large banks, there are some banks that have been around for a long time, but they focus on a funding. In Nigeria, the classic problem is that they are more willing to fund multinational oil companies or indigenous oil companies focused on the oil sector than funding SMEs and doing the work that needs to be done to be able to assess the risk of success and failure of a company. So they're more willing to do that, but in the absence of that, they're also more willing to lend money to the federal government or state governments at a high local rate of interest because it's rational.
But that's pretty much, I mean, the rationale that has been, I don't know, pushing crowdfunding, ICOs, whatever it's been, we get out of the system. We need to create a sort of parallel environment where small businesses, entrepreneurs can actually create a virtuous ecosystem of relationships which are going to be useful for them to grow the economy. And I mean, historically,
Yeah.
even in Italy, I think everywhere, I mean, financial institutions, a part that I think is very costly, because I still have in the back of my mind when I went to the OECD blockchain policy forum, and you had sitting on the panels like people from really large corporation talking about KYC identification of customers. And I didn't expect that it was such a large number, but I wrote it down. And when I tell it to others, they still, maybe if the data is real. But I remember that someone, I mean, just raise his hands and I say, let's remember that 30% of a financial institution cost, it's on KYC and paperwork to make
Yeah.
sure that you can clear a transaction.
Yeah.
So I mean, it's not business. No, I've been spending all that time with a small and medium enterprises that maybe needs I don't know 25K, 50K to start testing a new project or a new idea. It just doesn't make any sense. It makes sense that they focus on big corporation credit lines, on IPOs, on large corporation. So somehow I
Mm-hmm.
think that the search is understanding how you can create a parallel environment which is using technologies, is automated, but somehow is going to give the same benefits and tools to the small guys. And that's how I developed all this idea of somehow a digital asset exchange. That's what I worked when I was back in San Marino. That was my idea. No, I had the honor and the privilege to work in a country that doesn't have a financial markets, doesn't have the many regulation on funds and financial transaction, because obviously, I mean, apart from traditional banks lending money, there were not even the much regulatory infrastructure on venture capital funds, private equity funds. It was actually really difficult to set one up. And that's where we started designing a sort of decentralized, or I mean, maybe government-owned digital asset exchange. That it was
Mm-hmm.
somehow, I mean, the land of gold for the crowdfunding, because I always believe that that's the future of crowdfunding. Because crowdfunding, one of the major problematics that carries along is the lack of liquidity. Like I always thought I don't understand why people put money in crowdfunding, because I put €1,000, €5,000, €25,000 to get 1% of a company, hoping that the company one day it's gonna go public or it's gonna be sold, so that 1% on day one it's gonna transform itself into liquidity, and I can say I've done a good investment. They were running around small memes on LinkedIn at the time. I think Uber uh, showed no, the value accumulated by the early angels. And I mean, I think that there were people that were up, I mean, from 5K up to 25 million, 50 million, 75, 100 million, 125 million. And I would love to, I mean, to sit down. Imagine if a company you invest in crowdfunding is gonna do the sort of growth, and then you sit down and it's like nothing I can do. I mean, maybe I can go to the bank and say, listen, I put 5K like 5 years ago. Now it's worth 125. Can you lend me some money against those shares? Because I have no
Yeah.
idea how to get the money into my bank account. So the old
Yeah.
digital assets, it was you have assets which are exchangeable almost
Yeah.
immediately after you buy them. And that's where a lot of conversation on institutional level became very difficult, no? Because one argument was capital market stock exchange, they have to integrate blockchain to tokenize security. And then you sit down, but there's no reason to tokenize security. They are already liquid, right?
Mm.
Maybe I want to have a look at the technology infrastructure and understand if it's better to have a decentralized system versus a centralized system. But it's a technology play. It's not a strategy play. It doesn't make any difference because I can buy shares, I can buy bonds, I can buy whatever I want on the stock markets and they're liquid. I can sell them the next day. Why I cannot do it with private, small and medium enterprises equity, right?
Yeah.
So that's where, I mean, everyone in this environment brain started to crack. And my vision was very simple. I say, I need to provide the same liquidity opportunity to small businesses because
Yeah.
it's fair for the investors, it's fair for the business, and it's going to accelerate the services around capital circulation. That was the idea. So I think that this sort of design could work quite well in a sort of Pan-African environment.
Yeah. One of the challenges with that needs to be solved for that people think needs to be solved for when they think in those terms of tokenized is this idea of securitization, right? And the divisibility of an interest in future income stream from an entity. And how do you then provide liquidity to somebody who wants to, or secondary market liquidity? And that's I guess that's the thing, right? That on the continent you have a lot of private capital chasing opportunities, right? But the secondary market activity that does occur between one venture capital firm and another venture capital firm, right? Or one private equity firm to another private equity firm. It doesn't engage the public and other institutional investors, whether it's you and I wanting to invest in a local startup, or a fund based in London that is trying to invest in a technology related business in Silicon Savannah in Kenya. So part of this is about creating a call it an African owned solution to this problem, as it were, because certainly in the US and Europe to a less extent, but certainly in the US, there is a culture of investing in companies that may or may not, be the next big thing, right? That institutions and individuals are willing to back some of these companies, but it's also because they have the opportunity to do so, and that's where one of my again one of my sort of relation for my research is if you look at the entire universe of marketable equity securities globally, Africa provides 1.5% of those. Primarily, they are people are either listing in the U.S. or they are U.S. based companies. The U.S. is very different to Europe in that respect. But as you say, if you look at Ant, the recently cancelled Ant financial IPO, China has given access to its financial markets in a rapid way in the past decade. And so there's an opportunity for Africa to be able to sort of create the platform that will actually offer that to companies on the continent.
And that platform has to deal also with how economy structures,
Yeah.
distribution of people, distribution of businesses, distribution of services. So that's where it become a little more complex. Because I would guess, and I'm not sure about, but I would guess that developed countries like the US, they're pretty much designed in terms of architecture. No, you have centers like Boston, Silicon Valley, New York, where somehow you have an aggregation of entrepreneurship. That's where you have the private equity funds, the venture capital funds, the accelerators, the incubators, the government subsidies, the co-working spaces. So now you have an entrepreneurial society which knows how to move around, which knows how to reach the resources that it needs. But I would assume Italy, it's very much behind. I mean, I can see that in the last 2 to 3 years, you had a lot of investment and change into this sort of innovation ecosystem, as we call it, because the importance of, I don't know, giving a map to everyone that want to enter and play the ecosystem is super important. Because if you have no idea how to reach, I don't know, money, funds, knowledge, clients, partnerships. I mean, you're like lost in a in the middle of nowhere, no, without
Mm.
even a mobile phone with your Google map. You are trying to knock on doors randomly and figure out how to build something like that. And I would assume that the market in terms of innovation and entrepreneurship, apart from traditional businesses, which I think, as you mentioned, is oil and structure, some sort of industry which has been there for a long time, it must be still very much at the beginning, is it? Or you
Yeah.
have sort of centers. So all this design has to be done from a very traditional perspective, which need to understand all the new and modern dynamics to be able to propose a solution and an infrastructure which is going to be able to last for the next 10 years and actually bring the benefits that it needs. So it's
Yeah.
not that straightforward as a process, is it?
No, no, but by the same token, I mean, there are examples of, and let me talk about one other one. So there's and I happen to sit on a board in Nigeria of an investment that we made with an investor in a commodities exchange in Nigeria, AFEX. So it started in 2014. The idea really was about creating a national trading platform and supply chain network about some very specifically identified value chains, sort of maize, millet, sorghum, cassava, and now has become a very focused exchange on delivering and connecting sort of smallhold farmers. So agriculture being a big feature of African economies, but also a lot of developing economies, whether Latin America, Asia as well. And so connecting smallholders with users um, and off takers or buyers of the commodities that they're growing, but also providing sort of transparency on pricing is very, very much about digitizing the agricultural economy. Now, interestingly enough, that actually was formed as a PPP, so a public-private partnership. So it actually has a consortium of private sector investors, but also has the backing of the Federal Ministry of Agricultural and Rural Development. And in the 6 years that it's been in operation, it has grown. So the products that they offer live pricing on, but the way in which they also provide and use data to provide sort of real insights and access to the client base or the ecosystem of producers that hadn't been best served by sort of the market mechanisms that had existed for a number of years. And I think that idea of a very specific intervention to solve a very specific issue is the same sort of thing that I think there's a bigger issue around equity, but when I say public equity, that's where the transparency comes in, that there's a price that you can see, that you can then go to your bank and say, look, this is what it's trading at, or a company can use it as an acquisition currency. You said you didn't want to talk about currencies specifically, and we're shying away and staying away from the idea of digital currencies per se at the moment. But it does ultimately start coming back to that it's about how do you value these things and how do people agree on the value. The beauty of distributed ledger technology from a due diligence point of view is that companies will be incentivized to put this information um, onto the blockchain that is then observable by others, that is again transparent and doesn't require the trust of you're sitting across from a bank manager. But there are multiple applications in the way that you can sort of build to, you know, providing, KYC, the know your client information that gives comfort to banks. To I can see how this could build into or could be built into delivering this sort of what red herring prospectus S1 filing that talks about a company's future growth plans, right, in a way that then is observable by others, whether in another part of Nigeria, another part of the continent, or another part of the world, in a way that allows them. We give institutional investor comfort around information and data again.
But it makes a lot of sense. I mean, I'm always thinking how much of legislation innovation you need to support such a vision and such a design, right? Because blockchain, I mean, it's beautiful in terms of functionalities, but still the information that has to be put into the blockchain, they have to be trusted.
Yeah.
So the problem that you always have is how do I bring into a network all those counterparties part of the ecosystem? And we still live in a countries where every time you go to a public notary, I mean, you incorporate a company in Italy, you go to the public notary and you have to do your KYC, then you incorporate the company, then you go to the bank and you have to provide the same information that you get to the public notary to open the bank account. And from there, I mean, every time you interact with the counterparties, you keep on duplicating all those information. So somehow you put all those counterparties on a list and you do them as quickly as possible, just because you know that those documents, they expire within 3 months.
Yeah.
So if you forget one, you have to go back on the chain and ask for an updated version of each document to be able to actually open that account or that position with a counterparty. And I'm still thinking that to solve that problem, you need a sort of central regulation infrastructure that is gonna, I don't know, guarantee that once you be part of this, let's call it blockchain ecosystem, I mean, parties can trust each other. And that's one of the biggest infrastructure. I mean, if you just look at bank KYC, because I always thought that the banks, even when I was in San Marino, there was a discussion ongoing on KYC, because I mean, I, I think it could be the same for certain African countries. But when you have a small economy, you want to attract investments.
Yeah.
And then, I mean, if you come back from a sort of fiscal paradise perspective, you have very tight anti-money laundering procedures to be followed. So you always cross yourself between I want to make myself very accessible to an investor, but I don't want to make myself subject to penalties on the other side and ruin the reputation which I've been rebuilding. So the argument was always, I mean, how can we simplify and keep the same level of transparency and compliance? And that's, for as much as it was a very clear problem with possible clear solution, it was almost impossible to figure out. Like, because the way that the legislation works, penalties on lawyers, penalties on public notaries, or penalty versus banks, there's always a sort of tendency, and that's where maybe we go back to the word legacy, because to leapfrog, you need to change this legacy. Unless you put all this infrastructure and this traditional ecosystem in a way to trust each other in terms of regulation, compliance, transparency, or either there's no technology that is gonna somehow solve the problem. And then if you go cross border, I'm assuming that this problematic is gonna even become higher and more difficult to solve. And maybe in a country like Africa, where, I mean, you mentioned a few times,
Continent.
where the continent, sorry, I'm Italian, I'm excused when I do this sort of stuff. Then I'm concentrated on the topic, I'm trying to do sensible stuff. So, I mean, where you also have a lack of transparency, right? Because that's, I think, is the problem when you have economies growing. So where
So
do you
it's
think that the sort of vision should come from? Is it going to be one country leading another one? It's going to be a Pan-African institution coming together to look at this vision? How it's actually coming into a project phase, if it's coming onto a project phase?
Well, let me address it in a few ways. So when you what you just described, I was thinking as you were talking about there is the World Bank has a ease of doing business index, and I was doing some work last year with the Legatum Institute on economic openness, right? And so, as you say, in terms of attracting investment, and so one of the ways in which they measure, how open a country is, and how open to investment it is, and how open it is to the formation of businesses. How long does it take to do any of these things, right? So, how long does it take to set up a company? So, in addition to all the paperwork that you have to do, you fill out the paperwork, you send it to a government agency. When does it get approved, and does it come back so that you can move on to the next step? So there's that issue about where technology can actually help shorten that process, right? And and by shortening that, take some cost out of it. Next, there is the idea of comparability between countries and between regions, because the idea is that in order for people to trust this new process, right, they need to be confident that it meets their hurdles, whether that's just from their perspective or not. Right? That the idea that a company that has been set up in Rwanda much faster than it could have been set up in Rwanda 10 years ago, that there's still a degree of rigor around those processes, and if that trust is there, you have definitely taken some cost out of it. But to the last, to your direct question about who, I mean, I think that what we have seen, and by this I even mean you and I, is that we know that some of these Pan-African financial institutions are taking the view of running pilots in particular regions, right? And so there is the idea that a big country like Nigeria or South Africa could lead the way. I mean, if you look at the capital markets in South Africa, they are, South African capital markets are among the top 15 on the globe in terms of regulation, in terms of depth, in terms of breadth. So it may not be that rising tide in South Africa raises all boats across the continent, right? Or the capital markets are of a degree and sophistication that they actually dominate any aggregate data that you look at about Africa. A lot of it is about South Africa. So I think that it's either regional economic communities, so whether it's the EAC, whether it is in West Africa, which whether it's the West Africa or West Africa. So it all continues to lead me personally back to, what is the Pan-African institution that might be able to have either, if not the credibility, the convening power, that where you can use technology as a way of passporting some, best practice regulation and governance that you can effectively automate into the technology. That strikes me as the way of actually, I would almost say hyperscale the initiative, because I think in any individual country, whether it's Ethiopia opening up its financial institutions to foreigners, aside of what's going on there now, or Rwanda focusing very, very specifically on improving the environment for doing business, or Nigeria, where the recent protests on end SARS, not the disease, but the special anti-bribery and robbery group. Those protests were born out of the technology industry saying, like, look, we want to do something about this, and we're going to make our voice heard, because that's where the new drive of the economy in Nigeria has been coming from, and I guess needs to get out from under another set of historical constraints, right? So I think it's going to be a combination of a Pan-African institution, some regional cooperation, but I think ultimately, if you can get a country to lead on this, whether it's a country like Nigeria or a country like Kenya, you might then get other people buying in. I think the beauty of the sort of decentralized, I guess the flexibility from these decentralized technologies is the way in which people will be able to plug in at a time, more appropriate for them, um, after seeing some success and being developed elsewhere.
Which makes a lot of sense. I mean, somehow we always go back to sort of corporate strategy perspective, right? I mean, sitting down and say, I mean, this is a business challenge, is a sustainability challenge, is a long-term economic growth challenge. As much as we have different views on certain political or societal topics, I mean, when you look at economics, that's the way the world is going. So either we come together and we sit down and understand how, if you want to give to the people and the businesses what they need to flourish, and we evolve the infrastructure to allow for the services to happen and come to market, or either we're not going to be able to play the game in the next 5 to 10 years, right? That's I think where we end up all the time. Then obviously it's easier the more you have a hierarchical power, the easier it is to see this sort of solution coming to market. And for me, China is the biggest example. I don't think that over there you have that much conversations and and diplomacy and mediation going on when they decide what direction somehow the market is taking. I think in terms of Alibaba, Tencent, the central bank digital currency, once there is a vision and is agreed between, I think, a very small bunch of people within, compared to the whole size, you see, I mean, this experiment to explode and become a sort of general norm, which is the contradictory point that you have in today's market. Somehow the whole evolution about democracy in society that we actually fighting for in the last hundreds of years, they're becoming the weakness in terms of speed and ability to actually take decision. That's why for me it's corporate strategy, because in large corporation at some point it gets so much of internal politics, the different division, different companies in different countries, and might they struggle to adapt to the future, and that's where you have disruption coming into the picture. So
No, but you're absolutely right, because I mean, one thing that's implicit in what you say is also sovereign strategy, right? Like the idea that China has, as a country, because of how it's governed, is allowed to take a longer term view, without, getting the people to explicitly, approve, right? But the bargain is that they've raised 300 million people out of poverty, and so there are people who will who are happier with that. The challenge for Africa, I mean, I think there is this ultimately this there are the politics of individual countries, and where those get in the way of, I think, in a way, where those impede, a continental strategy, as it were.
it makes a lot of sense. Anyway, we got 57 minutes. I generally try to stay just behind
Yeah.
the hour, so I would maybe let whatever we haven't discussed for a second appointment. Would be nice and happy to have you back on a live discussion, Richard. So thanks again for your time this morning. Thanks everyone
Uh,
for listening, and I see you next time.
Thanks for having me, Sergio.
Ciao, Richard. Have a good day.
Ciao. You too.